Hello, everybody. Drew Brenner, your mortgage advisor here. And with interest rates being where they are, I've heard a lot of buzz around loan assumption, which is assuming or taking over the existing loan from the property seller, which is most likely at a much lower, more attractive interest rate than the current market. And I wanted to let you know exactly how that works because there's a lot of misinformation out there. So first, what kind of loans are assumable? So generally, it's only FHA and VA loans that are able to be assumed. Conventional and jumbo loans generally aren't unless you find some really weird special case. So again, FHA and VA loans. Now, one great thing about assuming a VA loan is you do not have to be a veteran. However, if you're a seller looking at having someone assume your VA loan, just be aware that until that VA loan is actually paid off, your eligibility is still going to be utilized. So if you go to buy another home trying to use your VA benefits, it's definitely going to factor in there, and you may not be able to get quite as expensive a home, at least with a zero down that the VA normally allows. So be careful with that. Now, let's talk about how exactly it works. So when you're looking at assuming a loan, you actually have to get approved through the seller's current mortgage company. So you're not able to go through me or your bank. You've got to go through whoever the seller is currently making their payments to. Then you'll qualify very similar to how we normally would. So they're going to look at your income, your credit, your assets, and they're going to make sure that everything meets current guidelines. Now, the really big confusing part about this type of loan is you are literally assuming the exact loan that the seller has currently. So by that, I mean that if the seller owes $200K but is selling the home for $300K, you have to have that $100K difference as money that you're going to bring to the closing. So you probably either have to have a lot of cash, or potentially you might be able to get a second mortgage or some other type of loan to help bridge that gap. But one way or another, you've got to have those extra funds. So it sounds like a really, really great type of loan, but as much as property values have gone up in the last couple of years, it may be a little bit more challenging to find one where you don't have to bring a whole lot of extra funds to the closing. So that's primarily how it all works. There's a few other ins and outs about it. So if you have some questions, give me a call. Let's chat about it. My cell phone is 214-282-6387. All right, thanks a lot and have a great day.